And that actually kind of ties in, perhaps, to what we're going to start with, because as we all know these days, it is not just a national economy we have to focus on. It is a global economy, and there are some things across the ocean that are giving people a little bit of concern. The Israel-Hamas war. What does that actually mean for retirement investors? Well, recent history has shown that the markets, they have a track record of mostly absorbing geopolitical conflicts, but as tensions continue to rise, what's your advice for listeners and for clients?
It definitely has been a bigger topic of conversations with people asking me about, the Israeli conflict and the impact on the stock market. What is the Hamas war going to mean for my retirement? These are things that I think are the top of news. Number one, first of all, let me give you the best tip and advice that I can give you today. If you're concerned, what you should do is schedule a review with your financial advisor, or get a second opinion. People that get together and talk with us, here's exactly what we do. Number one is we can stress test your plan, so we can run different environments and determine what could be the possible outcomes. If the market did start to go down, how much would be the maximum drawdown inside of the portfolio. And then what we can do is we can take you kind of through a series of questions. It's like going to an eye doctor that says, do you like this investment better than this one, or this one, or that one? And what it does is it helps you determine what your personal risk score is. You see, what I find is oftentimes people's personal risk score does not match up with how their investments are allocated. And that could be the audience that is at risk to make an abrupt change if and when something bad happens. And you want to make sure that your plan matches up with what your personal risk level is. But at the same time, you also want to make sure that your plan is going to help you optimize the results to achieve the outcome. You could be a very conservative investor, but sitting all in cash may not give you enough growth and income potential to have the money last forever. And I think that's why stress testing the plan can be a great solution. So again, if you're concerned about that, maybe you want to get a second opinion, arhq.com is a way that you can find out information about our firm, or give us a call, 419-794-3030. I know for the first 5 callers, we'd be more than happy to give you an independent portfolio analysis. But when we dive a little bit deeper into this and we're looking at the Israeli-Hamas war and the conflict that's going on right now, I think what we need to understand is stocks are going to be influenced by geopolitical events. It could be Ukraine and Russia, and it could be other things that we've seen happen throughout time. I mean, wars are nothing new, and the performance during such of these events can widely vary depending upon kind of the nature of the event. Look at the impact of, say, 9/11 and what happened here versus maybe other impacts of things that we've seen in the global or regional economy. And, how the market is perceived at the time. In general, there's a couple things I think to take into consideration. Number one is expect market volatility. These events often lead to increased volatility. Sudden developments and unexpected news really can cause sharp price movements for stocks. Traders can react to these events by buying or selling rapidly. It can lead to rapid price swings. So I was having a conversation with a client the other day, and we were talking about, okay, if the market reacts negatively, what are some predetermined entry points that we would buy into the market? So it's kind of like running the fire safety drill. If the market does near-term sell-off, what happens is the market will often, overreact. Some people fear volatility, but volatility, if used correctly, can create a buying opportunity. Now, the second thing that you're going to see is you're going to see flight to safety. In times of geopolitical uncertainty, investors are going to seek more safe havens. That could be things like precious metals, U.S. treasuries, defensive stocks, maybe utilities, consumer staples. It can lead to a decline in stock prices in general, especially in maybe more risk-sensitive sectors like technology or consumer discretion. So again, knowing what you own and knowing how you're allocated. Number 3, sector-specific effects. Different sectors could be impacted differently. We've seen defensive stocks that could benefit from increased geopolitical tension, while international companies with exposure to that particular region could face more challenges. The energy sector, it could be influenced by changes in the oil supply due to the conflicts. You can see currency impact. I also spoke with a client that came out to our economic summit the other day. He had recently spent a month with his family who were in Argentina. And he said that the ratio of currency a year ago versus today was, it's 3 times more expensive today than what it was a year ago. And in fact, just in the month that he was there, he also said that the prices continue to be impacted in that area, again, by currency exchange rates. Market sentiment, really, again, investors are going to play a critical role when we think about the fact that the stock market is just an all-day auction. So the more people to show up to buy, the higher the price is going to go. The more people show up to sell, the lower the prices are going to go. If the market believes the geopolitical event's going to be short-lived or have middle impact on the economy, stocks may recover quickly. Again, that's why it may create that buying opportunity that I was talking about earlier on market volatility. However, if the market sees this as kind of a long-term threat and leads to uncertainty, stocks may experience prolonged volatility or declines. Usually what happens is the market can handle good news and it can handle bad news. The market in general just doesn't like uncertainty. Then we have the global economic impact, things like trade disputes. You could have economic sanctions, large-scale conflicts. Those things can have a more significant global economic impact. It can cause an effect on things like corporate earnings, companies that could be impacted by those type of economic sanctions or conflicts in that region. Government policy response. We've seen, how the governments are going to respond to those geopolitical events. They can make different market reactions, announcements in public policies, sanctions, trade agreements. Those type of things can influence stock prices. And again, using an example, the U.S. sanctioned Russia when they went to war with Ukraine, and you could see the impact immediately impacted with companies that were, traded through stocks or mutual funds or ETFs that were Russia-based, especially when the U.S. market said, no, you can't buy or sell those stocks. Those prices really were directly impacted by those measures. And then again, the timing and duration. So the timing and duration of these geopolitical events, although they may be short-lived, could have temporary impact. Prolonged uncertainties can have sustained drag on the market. It's all about getting you positioned. It's about getting you positioned to not only survive and thrive in these type of times. So going back to my number one advice for you today, if you're concerned about the Israeli-Hamas war, if you're concerned about Russia-Ukraine and the impact that could have on the market, the number one thing that you should do right now is schedule a review with a qualified financial professional that focuses on your area of need. If it's retirement, that's what here at America's Retirement Headquarters we do. Maybe you have an advisor. Maybe you're not getting the advice that you need. Schedule a second opinion. It never hurts to get a second opinion. What we can do is we can stress test your plan. We can help you establish a realistic goal and make sure that your portfolio is positioned to accomplish the end goals on what you want to do. And again, for the first 5 callers, we'd be more than happy to have our team provide you feedback on an independent portfolio analysis.
It's really easy when news, especially on a global scale, dominates the headlines, and then you can feel powerless and wanting to take control of things, and just going blindly about it probably going to do more harm to you than having a tactical plan in place. So my advice: take advantage of this second opinion, take advantage of this portfolio analysis. Be one of the first 5 callers right now, and schedule a time to speak with the team at America's Retirement Headquarters. 419-794-3030. That's 419-794-3030. You can also find out more about the entire team at arhq.com.